Isaac on Advanced Fibonacci Strategies. So it's a good afternoon to you guys. Good morning, afternoon, wherever you guys are. Hey Travis, welcome back, welcome back. Good to see you, good to see you. Okay, so I suppose you guys can hear me loud and clear. You guys can see my screen and you guys can see my face. More importantly, being able to see my screen would be good. Okay, so with that, let me just kickstart today's webinar. And before I start, just a very quick disclaimer, understand that the information contained in this material is really intended for general advice and informational purposes only. It does not take into account your investment objectives, financial situation, or particular needs. Now, FP Markets has made every effort to ensure the accuracy of information at the time of publication, but they do not give any warranty or representation as to the accuracy, reliability, or completeness of the information contained in this presentation. However, having said that, it is my duty as the presenter to ensure that whatever I share with you guys is correct and as accurate as possible at the time of presentation. All right, so with that, this really will be the agenda for today. Okay, so if you guys were with me before in Fibonacci Strategies Part 1, this is pretty much a follow-up to Fibonacci. Okay, so Fibonacci is not exactly something that is very simple to grasp. Okay, it requires a bit of practice in order for you to understand it. There are a lot of notes out there on Fibonacci, and there are also different terms which can make things a bit confusing, and I have to admit, even for someone like myself, right, it can be confusing as well. Okay, so first and foremost, I will just quickly run through the basics, all right, of identifying how to draw Fibonacci properly. We do that by defining the market structure, okay, and we also do it by drawing in line with the market movements. And then after that, we look at Fibonacci retracements. I had to put a slash with extensions because I will explain to you that bit when we get to it. And then of course, there's Fibonacci expansions / projections because this term is used interchangeably. Okay, and finally, if time permits, right, we will put everything together, right? Fibonacci Confluence, and I'll show you guys how to use this confluence so that it can actually add it as a very powerful trading arsenal as part of your trading toolbox. Okay, so for those of you who are pretty familiar with the way that I carry out the presentation, you guys would know that I do not take questions at the end of the webinar. I prefer to keep things interactive. I like to do things in such a way that you guys can fire your questions back and forth. And if you guys have any questions, feel free to fire them away throughout the webinar. I will do my best to reply you guys where possible. If there are multiple questions of the similar nature, I will group them together and answer them at the right time. All right, so with that, let's really dive right into Fibonacci and understanding how to use it. So first and foremost, we want to talk about market structure. Okay, I'm not going to waste so much time as to show you guys, what is a Fibonacci, how do we do the settings. Okay, I'm not going to waste too much time to just give you guys the basics of where Fibonacci was derived from. Hi Bartholomew, good day to you as well. Thanks for joining me as always, right? Always glad to have familiar names here, so it feels like I'm having a nice chat with friends. Okay, so first and foremost, before we start using Fibonacci retracements or expansions, we need to understand what is the market structure. Okay, and market structure is not just randomly picking out swing highs and swing lows, right? We need to really understand what a market structure looks like. Okay, so I have some slides here, very simple one. You guys might be familiar with this. Okay, so this is an example of a unclear market structure, right? As you guys can see from the slides, okay, it's very choppy, right? You have wicks all over the place, long shadows all over the place, okay, and price really moves sort of in a sideways motion, right? You can see with the blue line, if it's very messy, hard for you guys to see, you can actually change the chart to a line chart and try to look for swing highs, swing lows. Now, generally speaking, before you guys ask me a question on what time frame Fibonacci should be used on, okay, based on my experience, the lowest time frame that you can really go for Fibonacci, okay, is really about the 15 minutes chart, right? Anything below that, I tend to find Fibonacci a bit iffy because price moves around a lot. There's a lot of volatility, there's a lot of noise, a lot of choppiness, okay? So it's very hard to look at the market structures, identifying the swing highs and the swing lows. Otherwise, Fibonacci works on every time frame, and that's the beauty of Fibonacci, right? Fibonacci really falls in line with the fractal nature of markets. So what that really means is that, you know, if you are going to see a pattern on the lower time frame, you zoom out, right? You still see the same pattern forming on the bigger time frame, and vice versa. All right, so this is an example of an unclear market structure, and we move on. Over here on the slide, okay, what we have here is a picture of a clear market structure. So if I just switch back again, you can tell that one picture of the chart is actually very choppy with very long wicks. Okay, the next one, we see price moving in a nicer manner, in a neater manner. All right, yes, there are long wicks every now and then. However, the market structure is a lot clearer. You can actually see price moves from one swing high to a swing low, do a very nice decent pullback before continuing in its trend direction, and then followed by another pullback again. Otherwise, it can actually go into a reversal as well. All right, so this is a good example of a clear market structure. Now, if you want the clearest market structure, then you're going to have to look at the biggest time frame, which essentially is the monthly chart. All right, of course, if you have the yearly chart, then you might want to take a look at that as well. However, if you're going to use the yearly chart for your analysis, then you're either a long-term investor, okay, or you are just trying to really find out what the big cycle of the market is. So are all of you clear so far with regards to market structure? What constitutes a clear and unclear market structure? Okay, while waiting for your replies, I will actually move over to the charts for a while. So just to give you guys an example, okay, what I have here is euro dollar on the daily, right? On the daily, you can still see that the market structure is relatively clear. Okay, you can see that price has pushed up in one nice trend, okay, and then after that, it comes back down in another movement, followed by another push up again. Okay, so this is a very clear market structure. So euro dollar is actually a major pair, but if you were to go down to the lower time frame, you tend to see that the market structure is not as clear as the daily. So let's go down to the 5 minutes. Okay, so on the 5 minutes, you can still see that prices are trending. However, you're starting to see a bit more chop. Okay, instead of price moving up in one straight line, okay, it pushes up and then it sort of goes into a consolidation phase before continuing its move and then making smaller consolidations again. All right, so to do a Fibonacci retracement on an area like that is going to be pretty impossible. Okay, so which is why I say that Fibonacci retracements and extensions, Fibonacci retracements and expansions are best used on the 15 minutes and above time frame. Okay, so these are just some examples. And if you're going to look at cross pairs, it's going to be even worse. So one of the worst pairs, I would say, is an analyst nightmare would be the Aussie Kiwi, right? So if we go over to the Aussie Kiwi, okay, and now we are on the 5 minute, you're going to see sudden drop, and then after that, it's just a huge chop sideways. Pretty impossible to look for proper Fibonacci retracements, and this is really the key characteristic of cross pairs, especially on the lower time frame. So you're looking at spikes like that, all right? So I'm in candlestick mode, okay? You're looking at spikes like that. Very tough to identify market structure on the lower time frame. But if you're to zoom all the way out on the extreme end, even on the daily, okay, they have long wicks, but you are able to see clearer market structure from here. All right, so just some examples of clear market structure and unclear market structure. Okay, so you guys are clear. Thanks for your reply, Andrew. Thanks for your reply, Travis. Let's quickly move on to the meat patty, right? The meat patty, the delicious part of the webinar. Okay, I'm talking about burgers because I had burgers for lunch. Okay, so yeah, Bartholomew, you're right. Aussie Kiwi is always full of long wicks. Actually, any cross pair, you do tend to see quite a bit of long wicks as well. So moving on to Fibonacci retracements. Okay, I had to slash it with extensions. Like I said, it's a bit confusing. You can try looking online. You're never going to have a clear answer on the difference between Fibonacci retracement, extensions, expansions, projections, right? Many names. At the end of the day, it's down to two types of Fibonacci drawings. Okay, so these two types of Fibonacci drawings is generally, the first type is made up of 2 points, and the second type is made up of 3 points. All right, so the 2 points one will be Fibonacci retracements and extensions. Okay, for that, let's go back to the chart. So first and foremost, I'm just going to use euro dollar as an example, okay, because it's a major, you don't see too much chop around. Okay, so first and foremost, when we want to draw retracements, okay, a very quick tip would be, let me just make this text a bit bigger. Okay, a very quick tip will be, number one, look for market structure. Number two, okay, we draw retracements on the recent completed move, right? Okay, number three, all right, I'll show you guys what it means by completed move. Okay, number three, we draw retracements, okay, in the direction of the move. All right. Okay, so it's in the direction of the completed move. All right, so putting all these three together will be actually a very good guiding principle as to how we are supposed to draw Fibonacci retracements. Okay, so let's just say right now we have euro dollar on the daily, right? The first tip that we have, let me just move this down. Okay, the first tip that we have right here is to look for market structure. All right, and we can identify the swing lows. Right, there's one swing low here. Of course, there are multiple minor swing highs, swing lows that we can identify along the way, but we want to look at the areas of big movements. All right, and this is applied. All right, you wash, rinse, repeat. You apply it on different time frames. From the monthly, you do it on the weekly, and then after you go on to the daily, and then so on and so forth. Right, so it's a top-down approach. Okay, so we identify the areas of major movements. All right, there's a swing low here. There's a major swing high here, okay, and then there's a major swing low here again, followed by a major swing high. Now, again, I understand all these are minor swing highs, minor swing highs, minor swing lows. All right, so we ignore that for now. Okay, now, is this, just to test you guys, is this area right now, the one that I'm drawing an arrow to, is this a swing low? All right, maybe you guys can give me your answers. Okay, so I have some answers coming in. Very quick reply. All right, so yep, some of you are actually saying that no, this is not a major swing low. Now, one or two of you saying that, you know, it is actually a major swing low. Now, again, let's go back to the guiding principle. Okay, this is sort of the laws of Fibonacci, right? As I'll say, if you really want to get your Fibonacci drawings correct, you have to follow this strictly. So you need to ask yourself, okay, with this current point here, right, which I've just asked you guys if this is a major swing low, you need to ask yourself, has the move been completed? All right, has the move been completed? And the answer very simply will be no. Okay, the move here hasn't been completed. Why do I say this? Okay, let's say if I follow my guiding principle and I draw in the direction of the completed move from high to low. Let me just change this to a color that you guys can see. All right, I'm going to make the numbers a bit bigger as well. Okay, look at that, right now. If price is going to push lower, okay, I'm going to have to adjust my Fibonacci lower and lower and lower and lower. And you look at my Fibonacci levels, they're just going to keep changing and changing and changing and changing. All right, so by definition, this move is not yet completed. Right, this move is not yet completed. On the other hand, if I were to look at this move, right, this is a push up. Okay, this is a push up, right? So I draw Fibonacci retracement. Okay, that is a clear market structure. We first look for clear market structure, swing low, swing high. We look for completed move. This is a completed move because market has already pulled back quite a fair bit. All right. Then we draw Fibonacci in the direction of the move from low 0.1 to 0.2, low to high in the direction of the move. Right. The levels here do not change at all. Okay. Even if price were to be here right now, and push much higher, okay, it doesn't affect this Fibonacci retracement at all. Okay, this will not affect my Fibonacci retracement at all. Okay, the levels are still pretty much intact. Okay, so this is the proper way of drawing Fibonacci retracement. Okay, again, we look for clear market structure. All right, you're just going to drive this into your head. We look for clear market structure. Firstly, the major swing high, swing lows on each specific time frame. Secondly, we look for the completed move, the most recent completed move, right? There is no point drawing a Fibonacci. There's no point drawing a Fibonacci based on this completed move when price has really gone down, come back up, and is now on the way down again. Okay, so this area is a useless area for drawing Fibonacci retracement. We want to draw on the last completed move, which is this area over here. So this area is the correct one. Okay, so retracement on the completed move, and then finally we draw in the direction of the move. Okay, so sorry, give me a moment. Okay, so this is really what it means, right? If let's say price is, let me just draw this. If price is going up, right? Price has moved up, all right, and now price is coming back down. A retracement, a normal Fibonacci retracement would essentially mean this, right? Firstly, there's a swing low, swing high. This is a completed move. We draw in the direction of the move, low, okay, low to high. What this really means is that when price is retracing, price is coming back down, okay? When price comes down to the 23.6 level, it means that price has retraced, okay? It has pulled back 23.6% of this original 100% move. And when price comes all the way down to here, price has actually retraced 61.8% of the original move. And of course, if price comes all the way down to here, 100%, this is what we mean by price has completely retraced its entire move. Okay, so this is how we use the normal retracements, right? All these are finding supports. Okay, if let's say price originally the completed move is bullish, and we draw based on the last completed move, we are essentially finding supports where price may pull back to. Okay, all these levels are possible support levels. So price may actually come back down. What price may do is price may actually come back down to this level, bounce a bit, come down to the 38, bounce a bit, come down to the 50, bounce a bit, and then come down to the 61. All right, that's essentially what it means. Okay, so now what happens if price, okay, pulls back even lower? Let me just move the entire drawing, give me a moment. Okay, what happens if price retraces 100% of the move and then goes even lower? Now, by definition, when price has retraced 100%, completely done a retracement, what this really means is that it's no more called a retracement, it is called a reversal. So over here, we can say that price is no longer bullish. It has done a reversal. We can confirm that it is now price is in a bearish configuration, right? And you can see that instead of 100% now, there is this other retracement level called 127.20%. Now, these levels out of the 100% are called Fibonacci extensions. Okay, why? Because it's extended further, right? The market has retraced and extended further. Okay, so that is essentially what Fibonacci extensions are. Okay, so I hope to really just put it out there to be clear. All right, no confusion from you guys. All right, when price is actually pulling back 23.6, 38.2, 50, 61.8, 78.6. These are normal Fibonacci retracement levels. Okay, these are normal Fibonacci retracement levels. When price has pulled back to 100%, we say that price has completely retraced its original move, right? And when price has actually pulled back beyond the 100%, the starting point, we say that price is in a reversal, in a confirmed reversal, and it has even, and when it reaches the 127.20 or even the 161.8, as you can see, this level here, we can safely say that price has overextended its retracement, right? So it has fallen into the Fibonacci extension part of the retracement tool. Okay, so are you guys clear with Fibonacci retracement extensions? All right, if you guys want me to re-explain that again, or the part that you guys are not clear about, please just put it in before I move on. All right. Okay, so most of you are okay with this. One of you, Kim, you're asking for me to explain again. So I will do it again, right? Because I want you to completely understand what is Fibonacci retracement and extension. All right. So for the rest of you who actually understand it, okay, please bear with me. Right. Let's say the original move, price made an original move. Okay, and the original move is bullish. Okay, so we identify and price, perhaps maybe it comes down here, okay, something like that, right? This is the original bullish move, right? Price is in a bullish trend, okay, higher highs, higher lows. All right, this is a completed move, and now price is starting to come back down a bit. Okay, price is starting to come back down a bit. All right, so what do we do when we are drawing Fibonacci retracement? The guiding principle, first we identify the market structure, clear swing highs and swing lows. All right, there is a swing low over here. Okay, there's a swing low here. This will be our point one, our original point. Okay, and then there's a swing high here. This will be the second point, right? So Fibonacci retracement only takes 2 points. Okay, so we'll draw. So we have identified swing highs and swing lows. Now we want to make sure that this move is completed. All right, so price has already come back down quite a bit. All right, price has already come back down quite a bit. We don't really care whether price is going to go higher again if it's in an uptrend, or price may just continue on its pullback, right? But the fact is that price has now come back down by a bit. And by definition, that this move here would have been completed. So we draw a Fibonacci retracement on the most recent completed move from the low. Okay, we draw it to the high. Why? Because we have to draw it in the direction of the completed move, right? So from the low to the high over here. Okay, and we can see, okay, we can see all the normal Fibonacci levels. Okay, when price comes down here is the 23.6 retracement. When price comes down all the way to here is the 50% retracement. Price pulls back further is the 61.8% retracement. All right, so all these levels, 23.6, 38.2, 50%, 61.8, 78.6, 88. All these are possible levels where you can find support, right? If you believe that the trend is going higher, you can actually use all these levels as pullback levels for entry to get in at a better price to ride the trend higher. All right. Now, if price has gone all the way down to 100%, okay, what we're trying to say is that price has completely retraced its previous move, right? So you can see that price started from here, follow a green arrow, ended here, and then price retraced, broke below the 23.6, broke below the 38, broke the 50, broke the 61, broke the 78, 60, broke the 88, and is now testing the 100%, right? So we say that price has completely retraced its original move. Now, what happens if price goes even lower than the 100%? We say that now this is a reversal. How do we know it's a reversal? Okay, in a market structure, right, when prices are on an uptrend, you have higher highs, higher lows. Now, when price is in a downtrend, you have lower highs, lower lows. Okay, so when price has reversed, essentially you see something like that. right? You see that price starts making lower highs, lower lows. Okay, and over here, when price is here right now, this area right now, price would have made a lower low compared to the original point number 1. All right, so we say that price is now in a reversal. It has extended its retracement to become a reversal. And when price finally comes down to this level, 127.20, or maybe it pushes even lower to the 161.8% retracement, we can say that it has entered the extension zone, right? The Fibonacci extension. Okay, this is the overextended levels of the Fibonacci retracement. Okay, so this is just naming convention. I just want you guys to know that at the end of the day, all right, this is how we use Fibonacci retracement. All right, Kim, so I hope this explanation is clear for you as well. Okay, the scenario is exactly the same, right? The scenario is exactly the same when the market is in a bearish configuration. All right, the scenario is exactly the same. Okay, so let me just erase all this, right? You guys should be pretty clear with Fibonacci retracement now. Oops. Okay, so now let's move on to the next portion, Fibonacci expansion, or otherwise known as projection. Okay, so this takes 3 points, right? So previously, let me just draw out my pen tool. Previously, Fibonacci retracement takes 2 points. Okay, you have point 1, point 2. Fibonacci expansions takes 3 points. Okay, so this is where you need a proper understanding of a zigzag structure. Now, between Fibonacci retracements and compared to Fibonacci expansions, if you ask me, I very much prefer Fibonacci retracements. In fact, all right, I would say up to 98% of my trading analysis, okay, chart analysis, 98% of the time, I actually use Fibonacci retracements more often than Fibonacci expansions. Okay, why? Because I like to keep it simple. All right, the more number of points you have, the more complicated it gets. Okay, because I'm going to start throwing in different market configuration. For retracements, you just need to look for clear market structure, right? And you just need to use the most recent completed market structure. Now, for expansions, the market structure that you need to look for this other market structure called the zigzag. Okay, and zigzags can be a bit tricky, right? Because it's always repainted over and over again as long as the market is moving. Okay, so Fibonacci expansions is ideally meant to be used when you are looking for resistance levels in a bullish configuration. You're looking for resistance levels, right, where price may reach, okay, where price may expand towards, right, where price may project towards. Okay, so it's a projection, right? In a bearish scenario, you're looking for levels of support where price may expand towards or project towards, right? So let's just go straight into the chart. It's a lot easier if I were to show you guys based on the chart. Okay, so let me just draw this. Okay, so this is for Fibonacci retracement. Let me just write it down. Okay, and now we move on to Fibo extensions, projections. Okay, let me move this to here. I'm just going to put this at one side so you guys can see. Okay, so what are the main guiding principles of Fibonacci expansions or projection? Okay, same thing, right? You need to understand the market structure. But the market structure here, okay, you, apart from identifying the key swing highs and swing lows, you need to also know whether it's a regular or irregular zigzag, right? Now, second, okay, expansions and projections, okay, may not be used, all right, may not be used on completed move. All right, it may not be used on completed moves. Okay. Okay, so expansions, projections tends to change quite a bit, right? Which is why I don't really like it as well. Okay, if the move is so-called completed, right, then you won't really have so much use of the expansion projection. You are just finding possible resistance level in a bullish market, and you're finding possible supports in a bearish market. All right, so may not be completed moves. Okay, I'm not saying that it has to be uncompleted or it has to be completed, right? It just may not be completed moves. Okay. Third, all right, because of the market structure, regular and irregular zigzag. Okay, the Fibonacci expansion projection, right, can be drawn in both ways, right? You can draw it differently from the direction of the move. Again, may not be in the direction of the move. Okay, so these are the rules, the guiding principle for Fibonacci expansion, projections, right, and retracement. So based on this, right, you guys can see already very clearly which one is easier to use, right? Which one is a bit more discretionary. All right. Now Fibo expansions, projections, for me, based on my experience, right, I feel that they work better if you actually understand Elliott wave movements better, right? Reason is because Elliott waves does look at triangle patterns, okay, and does look at a lot of zigzag patterns, right? You have regular zigzags in a triangle, you have irregular zigzags, right? Especially if it's a broadening triangle pattern, or otherwise some of you would be more familiar with the megaphone pattern. Okay, of course you also have a running flat, right? Which is essentially a sort of a channel. Okay, and then of course we have an expanded flat, that sort of thing, which is a wedge pattern, right? So this is where Fibonacci expansion projection can get a bit more complicated, but not to worry. Let's look over here using euro dollar again as a example, right? I want to try to structure this chart in such a way that it's easier to see. Okay, so we have the rules here, right? We have, give me a moment. Okay, we have the rules here. So first and foremost, let's talk about market structure. You guys know how to identify swing highs, swing lows, but do you guys know how to identify regular and irregular zigzag? There are two kinds of zigzag patterns in the market, okay? The first pattern is something like that. Okay, price pushes up, retraces, comes back down, makes a low, and then after that, price pushes higher again. Okay, so this is a regular zigzag, right? Let me just write it down. Regular. Okay, and then of course on the flip side you have the irregular. Okay, the two kinds of zigzag in the market. All right, so based on this, okay, based on this, let's, for naming convention's sake, let's talk about all this as swing high, swing lows, right? So looking at a regular zigzag, okay, so this is point one, the first swing low. Again, bullish configuration. All right, regular zigzag, very clear. In a bullish configuration, all right, you can see very clear regular zigzags. In a bearish configuration, also very clear regular zigzags. All right. However, for irregular, it's a bit more complicated as to whether it's really a bullish or a bearish configuration, right? But let's just talk about swing high, swing lows. This is point one. Okay, so swing low to swing high, you have point two, and then of course you have point three, right, which is another swing low, right? So swing lows and swing highs, they do not have to be at the top or right at the bottom. They are just areas of big movements where price actually does an explosive move, right? So you have the third point over here, which is a swing low in a regular zigzag, okay, the third point, the second swing low is actually higher, right? Higher than the first point. Okay, you can see very clearly, right? You guys can see very clearly. Let me just change the color for you guys. Where's my brown? Okay, never mind. Let's use a purple is a bit hard to see. Okay, let's use orange, right? You can see that point 1 is here and point 3 is higher, right? So that's a regular zigzag. Now, on the other side, you have the irregular zigzag. Okay, so same naming conventions. Let's go. Right, you have a swing low, right? And then after that, it pushes up, it forms a swing high, point 2. Now, point 3 is a lower swing low compared to point 1. Okay, so just to show you guys, okay, so the difference is that point 1 starts here, the swing low starts here. Point 3, you have a swing low that is lower, that goes below point 1. Now, when you draw Fibonacci expansion in line with point 1, 2, 3, when you identify the swing high, swing lows, okay, so Fibonacci expansion, all right, you can see the naming convention is a bit warped here. Okay, on TradingView, it says extension. If you go to MT4, it says expansion, right? So it gets very confusing, right? But I just want to put it up front that there really is a difference. Okay, so you draw it from point 1 to point 2 to point 3. Okay, let me just open up all Fibonacci ratios. I'm going to change the color a bit. Okay, you can see that you're actually, let me just change this to an arrow. You're actually looking for resistances at the top, right? You're actually looking at resistances at the top, okay? So when we say that price, let's say price pushes up here to here, we say that price has expanded or projected to 38.2%, okay, of the original move, right? And then after we push higher, okay, you especially to the key level, 100%, right? This is why zigzags are so important. Okay, one of the key levels for Fibonacci expansion projection, the key level is actually 100%, right? When we say that price has actually expanded or projected to the 100%, it means that this move is 100% of this original move. All right. Again, this is 100% of our original move. Okay, if let's say it has gone to the 61.8, we say that price has only projected 61.8 of the original move. All right, so this is for a regular zigzag. Okay, this is a regular zigzag. All right, ideally in a world of ideal scenario, right, the ending of a regular zigzag, point number 4, the ending should be at 100%. Okay, some people like to say in terms of Elliott wave, this is wave A, corrective wave A, corrective wave B, corrective wave, and then impulsive wave C, right? So in a corrective wave ABC, okay, we say that A equals to C, right? So 100%. Otherwise, sometimes the other naming convention can be A to B to C to D. Then people will say, okay, this is Fibonacci expansion where we have AB equals to CD. All right, so it's just really naming convention. At the end of the day, in an ideal picture perfect world of Fibonacci expansion and projection, 100% is really what you are trying to look out for, whether it's regular or irregular. Okay, sorry. Okay, so same thing over here, right? You have a irregular zigzag. All right, but you draw the Fibonacci expansion the same way, okay? Taking from point 1 to point 2, and then you drag it down to point 3, right? So you can see the story is the same. When price bounces up, okay, to let's say point 4, okay, the ending point, all right, the ending point to 100%, key level. What this means is that price has expanded or projected 100% of the original move. All right, so it's the original move. They are parallel, right? Not exactly parallel, but the distance, okay, that price has covered is the same. All right. Now, price can continue upwards, okay, and then this can be a bullish scenario. Otherwise, price may come to the 100% and then suddenly it goes down. Okay, it becomes a bearish scenario. All right, so in an irregular configuration, okay, it is a bit tougher to determine whether prices will continue in its bullish momentum, right, or is it actually a change in market structure. But ideally, this 100% level is still a key level. Okay, so the important thing right now to understand for Fibonacci expansion and projection is that you need to identify the two kinds of zigzags that we have in the market, right? Whether it's regular or irregular. Sorry, I'm keep pressing on the F1 button. All right, so back to this. All right, back to the chart right now. Now I want to ask you guys, okay, just sort of a test. Is this a regular zigzag or is it an irregular zigzag? Okay, I've got some answers coming in as well. I really hope you guys are getting all this right. Okay, so fantastic, good job, guys. Okay, so this is actually a very yeah. So you guys are actually paying attention. Okay, so you're right. This is a regular zigzag. Okay. Now I'm going to test you guys again. So you guys got that right. Okay, that's a regular zigzag. Now something like that. Okay, let's look at this. Is this a regular zigzag or is it an irregular zigzag? I'm just going to zoom in so you guys can see. Okay, regular zigzag or irregular? Fantastic, fantastic, right? So you guys are definitely getting the hang of it. Okay, what I need you guys to do to practice your Fibonacci way of drawing is really to start identifying market structure. When you can identify market structure and follow the drawing guideline principles of Fibonacci, right, you guys do not have to worry that you guys are drawing your Fibonacci wrongly. Okay, you guys are actually getting it right. All right, so you're starting to identify all this zigzag, irregular zigzag pattern. And interestingly, you can see when the market goes into an irregular configuration, okay, market starts behaving weird, right? Instead of continuing its uptrend immediately, it sort of goes into a sideways triangle. It sort of goes into a sideways triangle configuration. When market makes a clear zigzag pattern, right, you can actually start seeing price movements becoming a bit clearer as well. Okay, because I want to keep the words here, I'm going to just change another chart and just show you guys, right? We can look at any other pair. Okay, we can take a look at, say, maybe even a cross pair like pound yen. Okay, pound yen has a lot of trending movements. All right, we can look at a 4-hour chart as well. Okay, so looking at this, right, areas of swing high, swing low, 0.1, 0.2, 0.3, okay, something like that, and then price push up. Is this a regular or irregular zigzag? All right, so I'm waiting for the answers over here. Okay, if your answer is irregular zigzag, right, you guys got it spot on. Okay, you can see that the market now is sort of forming a very, going into a very unpredictable consolidation phase. Okay, so it's really a bit hard to try to see where the markets are going into right now, especially on the pound yen. But within, if you break up the irregular zigzag, within the irregular zigzag, you do see that price actually does a regular pattern as well, right? This is a regular zigzag. Okay, you can draw Fibonacci retracement, expansion or projection, sorry, 0.1 to 0.2 to 0.3 And look what happens, okay? Price expanded or projected to 127.20, and then it immediately tapped off and reacted there, right? You cannot say that there's any real strong graphical level, because the last time price actually visited this level, right, on the 4-hour chart was actually all the way back in April, okay? All the way back in April, right? So you can actually do all this sort of Fibonacci drawing to really help you identify key levels as well, okay? So 0.1, if this is an irregular, 0.1, 0.2 to 0.3, okay, and you can see that price sort of expanded, right, projected into the 78.6 level before dropping lower. But of course, there's a reason why price reversed there, because you can combine it with other graphical methods of doing analysis, and you can see that price is holding very nicely below a descending trendline resistance. Okay, so Fibonacci on its own is already very powerful. You cannot use it alone, right? Because at the end of the day, you want to combine it with maybe indicators or even graphical price levels. All right. So by being able to identify the regular and irregular zigzag structure, okay, it will actually help you guide your Fibonacci drawing much better. Okay, so Kim, I see your question, which time frame is the best? Again, I defer back to my opening statement, which is that Fibonacci actually works on every time frame, right? But its effectiveness is called into question when the market structure is unclear. Okay, so even if the market structure on the 1 minute is very clear, okay, if the market structure on the 1 minute is very clear, right, you can still use Fibonacci as well. But generally speaking, market structure on 1 hour, on the 1 minute may not be the clearest. All right. So you see, you have an irregular zigzag here, right? So you can actually draw Fibonacci expansion, 0.1, 0.2, and 0.3. And you can see that price, okay, came up to the 127.20, continue pushing higher to the 161.80, and even projected to the 200%. I'm going to check the 2.618. All right, just give me a moment. 2.618. Okay, and you can see very nicely, very beautifully, that even on the 1 minute, right, price has actually projected to the 2.618 level. You look to the left, there are no graphical levels around, okay, and price actually rejected from there and just starts coming back down, right? And you can see, if this is a completed movement on the 1 minute from low to high, if this is a completed movement, because there are areas of big movements, you can draw Fibonacci retracement from low all the way to the high in the direction of the move. Remember, that was our guiding principle. And what do you see? Price actually pulled back, tested 23.6, dropped lower to 38.2 retracement, bounced higher, came back down, tested the 50, okay, bounced higher, came back down, right? Could very well possibly push onto the 61.8 level on the 1 minute chart for pound yen. Okay, so this is really how we can start using Fibonacci retracement, Fibonacci expansions, right, to actually do our analysis, to combine them and look at graphical levels and do our analysis. Okay, so are you guys clear with sorry, Kim, did I answer your question with regards to the time frame? Okay, just go back to the very first chart. All right, any time frame, the Fibonacci drawings can be used as long as there are, there is a clear market structure, right? If it's unclear market structure, even if you're on a monthly and there's an unclear market structure, you will not be able to use Fibonacci drawing optimally. Okay, I hope that answers your question. All right, so now to sum up, okay, to wrap up, before I move into Fibonacci Confluence, to wrap up Fibonacci retracement and expansions, there is just one final point which ties these two ways of drawing Fibonacci together. And this overall guiding principle, let me just remove all these drawings of regular, irregular, okay? So these are my Fibonacci retracements and Fibonacci expansion projection rules, right? Finally, the most important thing, okay, whether you're drawing retracement, whether you're drawing expansions, right? You need to follow the Fibonacci trendline principle. Okay. Of course, you have to try to follow it as closely as possible, right? Sometimes it's never too perfect, right? We don't ever have anything that's really 100% perfect in the markets. Okay, if it were that easy, right, I will not be sitting here teaching you guys, right? You guys will probably be able to do this on your own, and you guys will probably be enjoying this from a yacht somewhere out in the Caribbean. Okay, so, right, what is the Fibonacci trendline principle? Okay, let's say, I'm just going to use a blank canvas again. Let's say price is moving in a straight line, right? Assuming, okay, price is moving in a straight line. Okay, and then after that it's coming back down. This is the swing high, swing low. There's a clear market structure, and it's a completed move. Okay, so we're going to draw a Fibonacci retracement from swing low to swing high in the direction of the move, in the direction of the completed move. Now, when prices move, right, when we are drawing in the direction of the move, okay, and we see prices, right, the candlesticks, okay, we want, right, sorry, I just need to turn on this trend line on the Fibonacci drawing. Okay, so MT4 already has it. On TradingView, you just have to double click to bring up the settings, and then after you click on trend line, all right, it actually shows you, let me just move this one side. You actually see a very small faint dotted line. Okay, so I'm just going to make it a bit thicker. Okay, show you guys this trend line, right? I think I'll prefer dotted. Okay, so black color. Alright, so this is the Fibonacci trendline principle, right? What this means is that, okay, when we know that prices do not move in a straight line, okay, so what's important is when we are drawing a Fibonacci levels, whether taking from 0.1 to 0.2 or drawing Fibonacci expansion, take 0.1, 0.2, 0.3, both of it has to follow the Fibonacci trendline principle, which means that when prices move, all right, they move as close and stick as close to the Fibonacci trendline where possible. Okay, so this would be in an ideal world, this would be a perfect Fibonacci retracement, because why? It fulfills all the rules of the Fibonacci retracement, the 3 points, and it also fulfills the final point, which is the Fibonacci trendline principle, right? You don't want a price movement where it goes, where it goes like that. Okay, it starts here and then price just zigzag, something like that, and then comes all the way down, and then after that it ends back here again. Okay, so this is a completely wrong way of drawing Fibonacci retracement. All right, or you can have price going something like that, and then as it goes sideways like that, and then suddenly it comes back up here. All right, ideally this is not how we will draw Fibonacci retracement. Okay, the same thing applies for, let me just extend the line. So I want to draw. Okay, the same thing applies for Fibonacci expansion. Okay, so let's say price has gone up, does a zigzag regular, something like that. Okay, so we draw Fibonacci expansion, 0.1 to 0.2 to 0.3, right? Trend line. And I'm going to change the color of the level so it's clearer for everyone. Okay, so you cannot really see the trend line here. Okay, so now let's say price does something like that, right? When you draw the Fibonacci, okay, I'm going to try to make it wider a bit so it's easier for you guys to see. So 0.1, 0.2, 0.3, yeah? Okay, when you guys draw Fibonacci expansion, right, or projection, the same Fibonacci trendline principle applies. Okay, you want price to stick as close to the trend line as possible. Okay, even if it keeps testing the trend line on one side, that's fine, right? That's absolutely fine. As long as it's compact, it sticks to the trend line as close as possible. That is a good example of drawing Fibonacci expansion projection. However, if you have something like that, like where price sort of whipsaws, okay, and then it cuts down like that, and then after it goes higher. Now this is really a very bad example of a Fibonacci expansion. So let's move over to the charts. Okay, let's move over to the charts and see whether I can give you guys a good example. Right, so this is a very clear, all right, this is a very clear, we have euro dollar on the daily, right? Now, there's a swing low, there's a swing low here, and there's a swing high here, completed move, right? We want to draw Fibonacci retracement. So we draw a retracement from low to high. Look at how price moves, right? Price is actually sticking relatively close to the Fibonacci trend line, okay? So this is actually a very good example of a Fibonacci retracement, okay? Even if we were to draw a zigzag, okay? 0.1, 0.2, 0.3. Now, when it comes to Fibonacci expansion, okay, this line here, right, it works, but it's not as ideal as this line here, okay, because this line here, you see price actually sort of chop across, deviates quite far away, and then comes back down to test it, right? But the other one, okay, price actually holds quite closely. Even though it chops around, it's still holding very closely to the Fibonacci trend line level. All right, so that is really the principle of drawing Fibonacci retracement and expansions. Okay, if there's anything that you guys need to remember, just take a screenshot of this. Okay, these are the guiding principles. I am very, very certain that you guys will not get this anywhere else outside. All right, I can say it with 100% confidence that you guys will not get this anywhere else outside. All right. Okay, so now moving on to the final topic. Okay, hang on. Okay, I'm just going to use the last few minutes, all right, to talk about Fibonacci Confluence. Okay, you can never really cover Fibonacci in 1 hour. It's never enough, right? But I do what I can. Okay, so Fibonacci Confluence, right? Over here we talk about Fibonacci Confluence. What really is Fibonacci Confluence? Ideally, Fibonacci Confluence is really referring to the fact that, you know, you have multiple Fibonacci levels lining up at the same level, and the more Fibonacci levels that line up together at the same level, that becomes a stronger area where price may find support or price may find resistance. Okay, so that becomes a confluence level. Now, what makes it even stronger is when you have for example, you have 100% Fibonacci expansion lining up with a 61.8 Fibonacci retracement. So the very key Fibonacci levels are lining up together, and then on top of that, you see price reacting over there. That gives you a very strong confluence level. Or even if price has yet to react on that level, with key Fibonacci levels lining up, finding confluence, you guys will already know that, you know, you can actually play a small reaction of the level. You guys can be a scalper and scalp off that level. Okay, again, let's go back to the charts. We have euro dollar on the daily. Okay, ignore the time frame, but let's say we have a chart like that, right? We see this is a completed movement, low to high. Okay, we can draw a Fibonacci retracement, 0.1, 0.2. So we'll do that. 0.1, 0.2, let me just extend it out. Okay, I'm just going to use the default. Okay, it follows the Fibonacci trendline principle. All right, you see that there's a graphical price actually spiked down to this area, graphical level at a 88. Okay, so you can draw a support there. Right, 88% retracement. Now, you also see that there is a 0.1, 0.2, 0.3 regular zigzag. Right, you can actually use Fibonacci expansion. 0.1, 0.2, 0.3. Okay, so I'm just going to use the default. Okay, now I'm just going to change the color to black. Okay, if I were to zoom in on this area, can you see that there are levels lining up here? Okay, you have the 78. Okay, I'm just going to highlight the 78, 60. Okay, you have 78, 60 Fibonacci expansion and 88. Okay, Fibonacci retracement, right? So you are starting to see, okay, that there is a confluence. All right, you're starting to see that there's a confluence here and there's a graphical level. So you can actually play a bounce off this level and it becomes a very nice trade. Okay, so Bartholomew, you're actually asking what if 78.6 Fibonacci extension lines up with 61.8 Fibonacci retracement? Yeah, that's a very strong level as well. Okay, you can definitely play off that level, right? So that is just something for you guys to take note of. Okay, so just picking another random place, right? You can see that I can draw a Fibonacci retracement from this swing low to this swing high. Okay, low to high, open all Fibonacci levels, right? And then after that, you can see a small little zigzag here, something like that. So you draw Fibonacci expansion, 0.1, 0.2, 0.3. I'm going to open up 100%. Okay, do you see that? The 100% is actually quite close to the 61.8 retracement level. Okay, so this becomes a very nice zone, right? It becomes a very nice zone to enter this area here. Okay, so this is a way of, you know, combining Fibonacci retracement, Fibonacci projection together to find confluence, as long as you remember the rules that you have over here. All right, so in the interest of time, I'm not going to be able to look at more charts, but okay, I'll just leave this open for the next 1 to 2 minutes or so for you guys to, you know, fill me any questions with regards to Fibonacci drawings. Okay, so I'm just going to be here for a couple of minutes. Okay, so how many, okay, so some question, okay, from Kim, how many Fibo would count as a strong confluence, 2, 3, or 4? All right, if you are able to find 5 strong levels of Fibonacci levels lining up together, all right, ideally, okay, the greater the number of Fibonacci levels together, the stronger the confluence. All right, so doesn't matter 2, 3, or 4, right? If you have many strong levels together, okay, you actually have a stronger confluence level. All right, but provided, okay, I have to say, the caveat here is that you have to follow the Fibonacci drawing rules that I put out here, okay? Because I can anyhow draw, right? I can just anyhow pick levels, right? For example, I can just randomly pick levels, like, you know, I can do a retracement, you know, that kind of things. Okay, just let me just clear all the drawings for now. Hang on. Okay, I can do a retracement, a big retracement like that. Open all Fibonacci levels. Okay, I can also do another small retracement. I can anyhow draw, right? And then there's a 161.8 Fibonacci extension, and then I can also draw something like that, right? Something like that, and then I can find, oh, this is close to -27 level, you know, and as long as you just randomly draw, right, you can see that all these levels are lining up, and then you can think that, oh, these are strong confluence levels, but that is not the case. All right, always remember that as long as you draw it correctly in line with these rules, okay, then your confluence levels will be valid. If not, just randomly drawing and you have 50 levels lining up, that does not necessarily make it a strong level. All right, Kim, I hope that answers your question. Andrew, can I have a lesson on how I use moving averages with Fibonacci drawings? Yeah, sure, why not? All right, if you just, you know, just can send the feedback to support@fpmarkets.com, all right, and request for it. I'm sure it can be put as one of the topics. Okay, so either myself or Aaron would actually, you know, be able to cover that with you guys. All right, so thanks so much everyone for your time, taking time out of your schedule today to go through Fibonacci with me. I hope managed to value add to your trading journey over this short 1 hour session. All right, any feedback, please email support@fpmarkets.com. Otherwise, for all webinars, right, you can actually go to fpmarkets.com/trading-webinars/ to register for the upcoming webinar. All right, until the next time, take care, trade safe, stay safe, guys. I will catch you again. All right, so you're welcome, Travis. All right, thanks for always, joining me. Thanks for your support, appreciate it. And you're welcome as well, Andrew. Have a great day as well. Until the next time, take care, guys. Goodbye.